Hello, welcome to AQA Accounting. In this session, I'll be going through the AQA 7127 Paper 2 2021 paper. So I'm going to start off with question 12. You've got the 10 multiple choice, which you could probably do yourself. And then you have a written question about a disadvantage of a costing system. I'm going to jump straight into question 12. I'll do a walkthrough of 12, 12.1, 12.2. So there's two sort of short questions there to cover, but it's more the understanding behind what you're doing and why you're doing it. So let's get started. So with question 12, I've got the question up over here. In summary, we have a table of sales units, values, and production units. And then we have the selling price per unit, the direct cost per unit. So basically, this is a management question, okay, on absorption costing. So they've given us data for 2 months, sales, production, etc. And then they've mentioned that a fixed production overheads, the budgeted amount is £22,000 per month, okay? And they are absorbed on the basis of budgeted output of 5,000 per month. So what this basically means is we have a budget of 22,000 a month, and they are absorbed based on the quantity of 5,000 units. Okay, I'm going to just mention that there again. The question says calculate the total production cost using absorption costing, the total production cost. Okay. Now, just just a summary on this, on absorption costing, and that is that when you have a production overheads for the month, the way absorption costing works is you divide the value of overheads and you divide that by the quantity, and that gives you, that's budgeted overheads divided by budgeted output, and that gives you your OAR, your overhead absorption rate. Okay, so we'll get started. Question 12.1. Okay, 12.1. Now for this question, it's 1 mark, so there's not a lot to do really. You just go straight into the question and read it, and it says calculate the production cost. Well, if you're going to produce something, you have direct costs. So you have direct costs, and they are £6 a unit. Okay, that's £6 a unit. And then you have overheads, 22,000 divided by 5,000. So if we just write that over here, £22,000 divided by 5,000 units, that gives you, I think it's £4.40. Let me just double check. Divided by 5. Yep, £4.40. Okay, so you've got direct costs, and then you've got the OAR per unit, which is £4.40 per unit, and that gives you a total of £10.40. So that is your answer in the box, £10.40. That's the production cost for one of these items. Okay, let's move on to the next question. Before I move on to the next question, just obviously reviewing this question, right? And the main challenge for this, or this section here, is that a lot of students don't actually know what absorption costing is. And like I said to you, in summary, you divide the overheads by the number of units that you're budgeted to produce. That gives you an OAR. Okay, now what do you do with an OAR? What is an OAR? OAR is an overhead absorption rate. What does that mean in plain English? It means every item that you produce, it will absorb some of the fixed costs. Okay, and so for example, right, I don't know, let's just say a company producing ice cream. Okay, and let's just say they make ice cream lollies. Okay. For every ice lolly they make, okay, they might have 50 different types of ice lollies, different flavors, different shapes, etc. For every ice lolly that they produce, they will factor in not just the direct materials, not just the direct labor, but they will have to factor in some of the overheads. Okay, so for example, rent or insurance for the factory, etc. These are overheads, so they have to factor that into their costing. How do you do that? You work out the total overheads, you divide that by number of units that you're making, and then you can work out an OAR. So every time you produce something, you know it's going to absorb a small amount of your overheads. And in this question, it's quite logical. We're making 5,000 units, we're spending 22 grand. Each of those units will absorb some. They will absorb £4.40 worth of overheads. You've got to factor that in. At the end of the day, if you're a business, you will obviously work out your selling price based on the materials, based on the labor, but you have to factor in overheads. Who's going to pay for them? You're going to have to pay for them, so you have to factor that into your costing. Okay, and that's just a summary of OAR there. Anyway, 12.2, 6 marks, income statement. For the month of February, you must read the question. It says February, okay? Don't do January. January you don't need, just the Feb. Okay, just the month of Feb. And it says here, read the question. Clearly identify any under or over absorption of fixed production overheads. Okay, I will do the question. I will explain what's going on with this question towards the end. Okay, so income statement. We don't really need that. We need this data here. So let's get started. 12.2. Okay. So I'll do a walk through the question. I'll give the explanation at the end, just because for those of you that need it, you can sort of hold till the end for it. Anyway, obviously income statement, you need to write down your format. So we're going to have sales, we're going to have cost of sales, so opening inventory, purchases, closing inventory, opening stock, purchases, closing stock, and that would give you cost of sales, and then you have gross profit. Okay, we'll leave it at there for now, and this is for the month of Feb. So obviously, let's get straight into it. So for the month of Feb, we've got sales 93,100. Don't need to do anything. The figures there, just slot it in. Okay, opening stock. Now, this is where you've got to use your logic, okay? For the month of February, we should have, there may be opening stock. There may be. How do we know? We've got to look at the month of Jan. Check this out. So you've got the month of January. You made 5.1. You sold 4.5. You've got some left over. How many left? 600. Okay, so we're going to have workings number 1, and that's going to be 5.1 minus 4.5 equals 600, and that's our opening stock. 600 units. 600 units. Now, they obviously have a price attached to them. How much are they worth? Production cost for one, £10.40. We worked it out earlier. So £10.40, 600 units, 600 times 10.4 equals 6240. Okay, so we made 5.1, we sold 4.5, we've got 600 left at £10.40, 6240 is our opening stock. Done. Purchases, we produced 4.8. Obviously, the cost is £10.40. So workings 2. This is opening stock. This is purchases. Now purchases was 4,800. 4,800 times by £10.40. Okay, so that equals 49920. Okay, that's your purchases. All we're doing is just timesing the units by the production cost. And then we have closing inventory. Now, again, just think logically, right? Over the 2 months, how many did we make? We made 5 plus 4 is 9,900. We made. workings 3, closing stock. We produced 9,900, but we sold, minus what we sold 8,900, 9,400. So 9,400 minus 9,400. So we've got 500 left. Okay, we produced 9,9. We sold 9,4. Totals of these two, which means we have 500 left at the price of £10.40, and that equals 5,200. Okay. So closing stock 52. Cost of sales. So 6240 plus 49920 minus 5200. This is a minus. We have 50,960. Sales minus cost of sales. 93,100 minus 50,960 equals 42140. That's our gross profit. Sales, cost of sales, gross profit. Okay, check the question again. So the question said, prepare an income statement using absorption costing for the month of February. Yes, we have done that. Identify any under or over absorption. Okay, so basically the simple answer to this question is in the month of February, if you've learnt your stuff, then you'll know what I'm talking about. In the month of February, we produced 4.8. According to the budget, we produced 5, meaning we produced 200 less. Okay, what does that mean? 200 less produced. This means that 200 units we have not factored in to our costs, which means 200 times by the OAR rate of £4.40, which is £880. This we have not absorbed, so we have undercharged. Because if we made the 5,000 units, we would have accounted for 5,000 units worth of OAR. We've only accounted 4,800 units worth of OAR, fixed costs, which means we haven't charged the other 200, so we have to charge that, which means it's £880 that we need to. This is we have under absorbed. And if you have under absorbed, meaning you have charged an insufficient amount, then you must treat it as an expense. Okay, if it is over absorbed, if it is over absorption, then it is form of you have charged too much and it will be an additional income. If you have under absorbed, it is an expense. You must charge 880. Okay, this is under absorption. The question says clearly under absorb, SORP, under absorption. This is under absorption. We have undercharged. Okay. Just one moment. Let me just quickly check that everything is all good. Just the final figure actually, which I've not done. So let's just check this. 42 140 minus 880, 41260, 41260. This is your final profit. I think I got a bit carried away there. Okay, anyway, I mentioned to you at the end that I will explain the sort of theory to this, okay? So essentially, what the question was asking us to do, which is over here, that's the data there that we need. Okay, essentially what we've done in summary, quick overview of the question, let's just wrap it up here. That's given to us, I'm not going to need to explain that. Opening stock is based on what we had from left over from the month of January. You know what you produced, you know what you sold, you know what you've got left. Then you've got your purchase figure, which is the production units times by the production price. And then you've got closing inventory. So overall, obviously, if you know what you've produced and you know what you've sold, then the rest of it will be left in the month of February. And that's that at the £10.40 value. Okay, you've got your cost of sales, you've got your gross profit. Now this part here is probably where students are going to go wrong, and they probably don't know what absorption costing is. All that means is that we did 22. Remember that 1 mark question? We did 22 divided by 5. That gave us an OAR rate of £4.40. Okay, every time you make something, we're going to include £4.40 as part of our costing. However, okay, and this is where I said the explanation will come in. Look, if you look at the month of January, we produced more than 5,000. Okay, so we made 100 extra. We made 100 extra. So for the month of January, because we made 100 extra, we would have charged. Remember, we only need to charge 22 grand worth of overheads. But what would we have done? Here's my calculator, I'll show you. We would have done 5.1 times by £4.40. We would have charged extra. We only need to charge 22. We would have charged extra 4.40. Okay, meaning 100 units we produced extra times £4.40. So in the month of January, because we produced 100 extra units at £4.40, that means £440 was over absorbed, and that, so do a dotted line there. This is just additional info. What that means is we would have charged too much costs, which means when you work out your final profit, if you have over absorbed, what you do is you put 440 and you treat it as an additional income or other income, and that means profit goes up. Okay, whereas in this question we produced less, so we undercharged our costs, which means we have to include what we didn't. So 200 times the, okay, so 200 times the £4.40, what we didn't charge, we must include for the year. And that's why we have over here, okay, that's why we have the, where is it gone now? Over here, the 200 that we didn't produce, we've times it by £4.40, and that we charge and we reduce our profit, because at the end of the day, we never paid 22 grand, we paid about 21,200 or something like that, 21, what is it? 21,120, I think it is. Okay, so we missed the other 880, and therefore, as part of this costing method, we must charge that to the income statement, treat it as an expense, and reduce our profit. Okay, so that's a sort of a section A question on absorption costing. It ticks the box of the topic of absorption costing. You've calculated it, you've prepared a statement of that as well. You've seen the treatment of OAR in over or under. So the only thing it could come up in section B as well, just a more question that's got more calculations, I guess. But the treatment is the same in terms of an IS, whether it's section A or section B. So I hope you've benefited from that. Keep an eye out, there'll be some more videos coming up later this week. Thank you for watching, and take care.